All right, welcome to Module 1. Before we dive into how to find these, the numbers, the financing, the strategies, I want to start with something way more important, and that's your mindset. Because the truth is real estate investing isn't just about money or properties. It's about thinking differently about wealth creation. And in my opinion, it's about generational wealth. Most Canadians never buy an investment property, and it's not because they can't, but it's because they don't believe they can, and they feel like it's just too risky or something like that, right? At the end of the day, though, you're entering the rental business. You buy and rent homes to people. It's a service. You become a landlord, and your job is to provide beautiful, well-maintained housing for the people. And if you do that well, you build wealth. Really, that's what it is. And a business to function properly needs to be profitable. It has to have enough cash to sustain itself and provide a yield to make the whole thing worthwhile, right? So we can generate wealth, but the day-to-day is really providing homes for others. Beyond that, I hear of many want to be investors who say that they're waiting for the perfect time, or they think that they need to be rich first, or they're scared of the what ifs, all before they've even gotten into the business. But the secret, the perfect time doesn't really exist. The only difference between investors who succeed and everyone else is that we make decisions based on numbers, not emotions. We follow a business plan and grow the units under management one at a time, right? When I started, I just bought my first one. A couple of years later, I bought my next one. And then it was a couple of years later, I bought another unit. So it took me like 5 years or something to buy my first 3 doors or units, right? And I've been learning for a while. And what I've learned is that the moment I bought my first property is when my mind started to shift in this way. My first investment property was in a small town called Chestermere, Alberta, just outside of Calgary. And it was a simple condo. I got it brand new. It wasn't anything fancy, but it was brand new. I bought it for $210,000. The rent was $1,400 a month. I locked in a fixed mortgage at 2.89%, I think, something like that. And I cash flowed it for about $300 a month or something for quite a while. Over the years, my rent has gone up, and I've had times where the rent has gone down as low as $1,150. But because I had the cash flow buffer, I was able to weather the storms and stay in business, and ultimately that's how properties appreciate and debt gets paid down. Now here's the part that changed everything for me. Even after I paid my mortgage, my taxes, my insurance, my maintenance, I was still cash flowing. That is the key. And that was with a 25% down payment. That was 14 or 15 years ago now. Ever since this, I have been through, like I said, the highs and the lows. And when the market did crash, I think I did get to around $1,150, which took out almost all my cash flow, but nonetheless, I was still profitable, right? I was cash flow neutral, but my cash flow did protect me from becoming unprofitable month to month, even in the hardest times. Today, I think that condo is renting for like $1,500 or something like that. Yeah, I think it's $1,500. We raised the rents last year. I've refinanced it one time, and the debt to equity ratio is, I think, just around the 50% mark at this point. 14 years later, right? So still cash flowing after the refinance, and that property wasn't a get-rich-quick play at all, right? It was a steady, predictable, and boring, in the best possible way, kind of an investment. And I've done that same thing over and over. I don't look for excitement in this business. I look for the boring, it's going to work kind of play, right? And it's not hard. You can calculate all this stuff before you even make your offer. You can calculate a lot of it. But for me, this represented proof. It's what showed me that real estate could create true financial independence as I got older. In my later years. Not through speculation, not through luck, but through just basic math and discipline. I still make my living today from my operating. I'm building an operating painting franchise across the country, and that's my operating company. And I use the retained earnings from the company to buy real estate. That's kind of my investment strategy. Ultimately, though, where I'm going with this is that there is a mindset shift from speculation to cash flow thinking. In business, we don't want to get involved with unprofitable businesses that operate at a loss. Most people treat real estate like it's a lottery ticket. They buy hoping prices are going to go up, which is literally what speculation is. It's really stupid. But when you focus on cash flow from day one, you don't have to hope. And this becomes the simplest business in the whole world. You make money every single month, whether the market goes up, down, or sideways. The rents are usually pretty stable. And your cash and debt repayment alone without the actual appreciation of the property is usually going to yield you somewhere between 7 and 10%, not counting the property going up in value. And we can calculate that right off the top. That's kind of the mindset that I want you to have as we go throughout this course. So we don't buy based on hype, we based on income, expenses, and monthly cash flow as a percentage or a return on investment. We focus on stable, positive cash flow, and we let the appreciation side of the business be the bonus, not the plan. Although we do plan for that as well, we still want to make sure we're making a good, healthy return every year, even if the property is stable and not going up in value. So the next thing that we need to chat about is your why. Before you get into this business, basically, you want to have a really clear understanding of why you're doing it, because you really don't have to. There are other more passive investment strategies out there, whether that be stocks, bonds, index funds. Some people just buy cryptocurrencies like Bitcoin, and it's very passive, right? You can keep an eye on it, but it's much more passive than this business. So for me, my why was freedom and the ability to control my time, my yield, and build long-term wealth with stable assets. I liked the idea of having assets under management and to stop trading hours for dollars. You know, I do that in my painting company as well as we franchise the company. It's the same idea. Real estate has that quality too, of you can use leverage, whether you're leveraging time, money, people. That's the quality that builds wealth. For me though, I really did want to learn about assets under management, how to take care of these assets. Maybe for you, it's about building a legacy, helping your family, creating security in an uncertain world. Whatever it is, just write it down and come back to it often. Maybe you want one property or door. Maybe you want 100 or more like I do. But when things get hard, and they will get hard, your why is really what's going to keep you moving forward. Your why is going to anchor your problem solving, right? I had to order a fridge mechanic just last week for a property that isn't even in the same province as me, right? My property management was like, my property manager was on vacation, and I had to respond, right? That stuff happens. Now, if you're watching this thinking, I'm not ready, I get it. Neither was I when I bought in Chestermere. But here's the truth. No one really feels ready when you start some new business or some new investment strategy like this. You learn by doing. So you prepare by studying and doing a course like the one that you're doing right now, connecting with the right people and running the numbers. But eventually you do have to take that first step and take action. Start by learning to think like an investor. Start by looking at deals, talking to brokers, listening to me, or just analyzing properties online. The point is to start moving, because not taking action, waiting until everything's perfect, that doesn't make sense. That's a fantasy. And that's really what keeps most people stuck forever. Real estate investing isn't risky. What's risky is depending entirely on a single job or the stock market for your future. Throughout this course, I'm going to walk you through exactly how to think about markets, analyze deals, finance them, manage them, and yeah, I'll share some real numbers, some real examples, including my own properties, and you'll get all the tools and templates that I personally use today. And I've iterated and made them better and better over the years, but I'm going to share all that stuff with you. Because if you think like an investor, you're going to act like one. And when you act like one consistently, you'll become one, or you are one. So in the next module, I'm going to show you exactly how to run the numbers, how to look at a deal and know within minutes if it's a solid investment. I'll walk you through a live example using my actual spreadsheet and break down how to calculate cash flow the right way. For now, your action step is simple. It's just write down your why, post it in the community, share it with others, share it with your friends, family, and just commit to starting this journey. Not someday, but right now. So I'll see you in module 2.